For this session, we are now to talk about the 10 axioms of finance. So the 10 axioms of finance actually cannot be found in the textbook, and it is not actually added to the uh, syllabus. However, I intend to include it because this serves as a benchmark for a financial manager. As you all know, as you have finished discussing Introduction to Financial Management, a financial manager is tasked to make various decisions during his term as a financial manager. So these various axioms or 10 axioms of finance could help the financial manager in his decision making. So these are different benchmarks that could help the financial manager in decision. So let's now dwell into and discuss the different axioms of finance. Let's start first with defining what is 10 axioms of financial management. So the 10 axioms of financial management sets the foundation of financial decision making. So as I said a while back, if you are a financial manager, these 10 axioms of finance could help you in your decision making, whether it is financing decision, investment decision, dividend decision, or risk management decision. So let's start first with axiom number one. Axiom number one is your risk return trade off. So this is important for you as a financial manager, especially if you are making an investment decision. So the risk return trade off provides that the more risk an investment has, the higher its expected return should be. So what does this mean, or what is the use of this particular axiom to you as a future financial manager? Now, as I told you, you can make decisions relating to investment. So in investing, you should always haggle that if the risk of a particular investment is high, your returns should be high. And if the risk of a particular investment is low, the return should be low. Why this should help you? Because again, if you are to invest and you think the risk is high on that investment, then you should ask for a higher return to compensate for that higher risk. So for example, nowadays, in this pandemic time, it is very hard to open a new business. So for example, you are to open a uh, coffee business, coffee shop. Now, since you're opening a coffee shop in pandemic, rarely, of course, that coffee shop will be full by customers. So, bibihirang may papasok dyan sa coffee shop na yan kasi nga pandemic. Madalas, ayaw nilang tumambay sa labas. So if ever you are to make an investment decision on that coffee shop, of course you know that the risk is high. That anytime that coffee shop might be liquidated due to high losses or high operating losses. Therefore, if you are to invest in that high risky project, yung coffee shop na yon, sabi natin risky project siya, high risk siya, therefore you should ask a higher return. So in risk return trade-off, as an investor or in making investment decisions, you must always take note that if the risk of that investment is high, you ask for a high return. And if the risk of that investment is low, you ask for a low return. You ask for a low. Okay? So that is the risk return trade-off or the first axiom of finance. The next axiom of finance is the time value of money. So what is your time value of money? Time value of money under axiom of finance means a peso received today is worth more than a peso received in the future. So again, this is either in your financing decision or investment decision. So if we look into in a financing decision, if you receive a peso today, of course, the person who gave that peso today expects that that 1 peso is more than a peso in the future. Again, in a financing decision, if ever we are to receive a 1 peso today, the person who gave that 1 peso or that finance expect a more than amount than the peso he gave you today. So a peso received today is more worth more than a peso received in the future. Or if you are investing today, if you invest peso today, of course, this could be worth more in the future. Sir, why do we always talk on a peso today? This is because the change in the purchasing power of peso, or your PPP, purchasing power of peso. I know you have heard already of that term in your economics, purchasing power of peso. So in case, guys, you are either financing or investing, always take note that there are fluctuations on a purchasing power of peso. There might be increases or decreases in the value of a peso. Therefore, in making your investment or financing decisions, you must always take note into the time value of your peso. Most common example or a practical example of your time value of money is that candy. 1 peso today can purchase one candy. But let's say in 2035, is your 1 peso enough to buy one candy? Not anymore. It is worth more than one candy. So in investing, if you invest 1 peso today, after 10 years, you should expect more than 1 peso. If you finance 1 peso today, the investor should expect more than 1 peso. Okay? You differentiate this one with our next topic. Okay? This one you make use in making your decision. That perhaps if I invest, I should expect more. If I finance 1 peso, the financer expects more. That's what we look into in making a decision as we're investing and financing in your time value of money. But the time value of money, as you can see in your modules, as our topic number 2, is different. Okay? It is different. So this can aid in this decision making. Here, we are to compute as the value of money. Axiom number 3, cash is king. Need I emphasize more that cash is king in finance? Sir, why is cash king in finance? Take note, when we talk of finance, we are managing money. So what do we manage? Money. It is not profit. Because as we have laid down a while back, that what we do with our finances, as long as we have finances, we try to invest them and then we try to reinvest them again. So as much as possible, we must be liquid and have enough finances to cover our operations and investing decisions. Okay? Unlike in accounting, what is king is profit. Okay? So if you are profitable, then okay, you are in a going concern basis. But in financial management, since we are talking about money, we are talking about finances, then our king here is cash. We need cash. We need cash. We need finances. Okay? So at least here, you cannot spend profit or net income. That's true. We have emphasized that already in the profit maximization, not a proper rule in shareholders' wealth maximization. That profit is not enough to maximize the wealth of the shareholders. Because again, they are only figures. You cannot really spend it. You cannot really spend it. Because what is to be spent in your investing decisions and your different operating decisions is cash. And later on, when your operation results to a better operation, therefore you have an increase in cash and ultimately you could reinvest that. Because what happens here is you finance, you place it in your operation. When we say you place it in your operation, you produce and then ultimately sell. And then eventually, whatever is your earnings together with your initial finance will be again reinvested for your operations. That's how business works. That's how business works. And aside from your earnings plus your additional finance, earnings plus additional finance, you have two things to do that. You have two things to do with that. And what are those two things? The first thing is reinvestment. The second one is by distribution. You can distribute it to your shareholders and etc. Okay? Again, cash is king. That's why soon when you decide, you look into the cash flow. Okay? You look into the cash flow. not into the profit. Okay? So in investing, anong titingnan? You need to look into cash flows, not profit. Especially, you need to reinvest your finance. Okay? Unless you have infinite finance, then you can look into profit. This is profitable even if I can collect it after 5 years. Clear? But since we all know that our finance is finite, then we look into our cash flow. The easier cash flow, the better. Because in finance, in making decisions, cash is king. Fourth one, incremental cash flow. For incremental cash flow, this happens during investment decisions wherein you have two or more investment decisions which are kind of the same. So let's say investment decision one and investment decision two. So you look into their cash flows. Let's say their cash flows are almost similar. So what is incremental cash flow as an axiom of finance? Incremental cash flow tells you that you look into the increase or decrease in cash or the difference between the cash flows if the project is done as compared to the other. So in our example, we have here decision one and decision two. In here, we have the same cash flow. However, we look into their difference. So perhaps the cash flow here in decision one is collectible within 3 years, while here it can only be collected after 10 years. So that could help in making your decisions. So you look into the difference between the cash flows. So the flow or cash here is within 3 years, here 10 years. Okay? Incremental cash flows in making decision. Axiom number 5, curse of competitive market. So what is this axiom number 5 or curse of competitive markets? So here, normally, if you are an investor and you invest or place your finances in a competitive market, so it is a very marketable project. So let's say nowadays, what is a marketable project or what is a competitive market? Most competitive market right now, I think, is your e-commerce or your online selling. That is one of the most competitive market right now because due to the shift of the purchases, instead of purchasing face to face, it is better now to purchase online. That's why it is a very competitive market nowadays. Now, under your curse of competitive market, the problem here is that if you invest in a competitive market, the problem is you might go out of that market anytime because of your competition. So it's easy to enter, and at the same time, anytime you can go out of that particular market because again, you have many competition because it is a competitive market. Therefore, having many competitions, then anytime your business might lose its share on that market. So normally, if this is the market, let's say, let's have Lazada, Shopee, Zalora, for example. So if this is Shopee, if this is Zalora and this is Lazada, this means that this is the portion that is occupied by the market by the Lazada, Shopee, and Zalora. Now, if this is a competitive market, let's say you are to invest in that competitive market, the problem is, of course, you can enter on that market. But at the same time, since it is a high competition, what is the effect of your investment? Perhaps your investment will not take too long in that particular market. Okay? So that is a very profitable project or very profitable investment. However, there is a high competition. So what should we do in a curse of competitive market? So how do we keep ourselves in that competitive market? First, you must differentiate your product among them. So let's say Lazada, Shopee, and Zalora already has different product differentiation. For example, Zalora, they are only into your dry goods. Lazada and Shopee, anything. Okay? So if you want to keep yourself inside that market, you must differ your products among them. So you must look into a product which is not sold by Lazada, Shopee, or Zalora, but I think There's nothing that is not sold by Shopee or Lazada nowadays. But for example purposes, you must differentiate yourself among them. Okay? You must create your own market share among the market. So if this is the market, if there is already Lazada, Shopee, and Zalora, at least get a share on that market for your product that is kind of different among all of them. Next, you keep your costs low. So when we say you keep your costs low, if you cannot differentiate your product, you keep your costs low. So for example, if you purchase something for sale, you must purchase it at a lower price. Why? If you keep your costs low, eventually your price, your price, let's say before it is 10, now you can purchase at 8. Before it is 18, now it can go down because you have a lower cost. Okay? So if you keep your costs low, therefore your selling price will go down. It will attract more percentage on that particular market or on that competitive market. And lastly, to keep yourself in that market, you provide a higher service and quality. So aside from different things, or there is a difference into or differentiation in your product, you must also keep a good service and quality. Because what keeps customers in a particular market is the good service and quality provided by a particular business owner, right? Person. Axiom number 6, efficient capital markets. So again, in making investment decisions, there must be an efficient capital market. So for example, you are in to invest in Apple or in the Philippines, San Miguel Corporation or Jollibee Foods Corporation. So what are these types of company? These companies are normally known as your listed companies. So what is a listed company? A listed company is a company that is publicly listed in the Philippine Stock Exchange. So you can see the changes in the share prices, the effects of the shares of these different businesses in the PS. So what is this efficient capital market? In making a decision, you look into whether that particular investment decision has an efficient capital market. The question is, when can we say that the capital market is efficient? The capital market is considered efficient if the markets are quick and the prices are right. So in short, if you are investing in Apple, San Miguel, and GFC in a Philippine Stock Exchange, our capital market here is the Philippine Stock Exchange, meaning Philippine Stock Exchange must be quick and always efficient. Because if ever Philippine Stock Exchange presents for prices which is for yesterday rather than today, then you will be misled in making your investment decision. Therefore, in making your decision, you must look or ascertain whether the capital market is efficient or not. So take note, the capital market must provide for quick and right prices, meaning all of their information provided is correct and it reflects the current market prices. Okay, because why? Let's say you are to invest in Jollibee Foods. Nakalagay doon 50 pesos yung current market niya. Pero hindi pala efficient yung market. Ang current price niya pa lang is 30. Yun pala, nalugi ka na. Okay? So it's important for you to determine whether in making that decision, the market is efficient or not. Axiom number 7, the agency problem. So in making your decision, you look also into the agent. Okay, what is this agent? So normally when we talk about agent, we have two parties here. And who are the parties? That is the principal and the agent. The principal is the owner of the business. And normally the owner of the business is not the person who manages the business. It is through a CEO, which is not the owner, or any other person not the owner. So if ever the owner is not also the person who manages the business, then we have principal and agent. Okay? So again, when do we have this agency problem? So if you are an owner of the business and you operate your own business, no problem. But if you have a manager or a CEO to look into your business while you are away, then you have an agent. So you have principal and your agent. What's the problem with this? We call it agency problem. Why? Because of course, as the owner, you have different objectives. And as the agent, it also have different objectives. Since they differ in objective, the agent and the principal, we have now an agency problem. So in making economic decisions or making finance decisions or investment decisions, you must always take a look into that particular agent, whether you will have a problem soon on that agent or not, whether the agent will focus itself into the maximization of shareholders' wealth or will work into the objectives or personal objectives of that particular agent. Okay? So as you can see, as based in this particular slide, managers may make decisions that it is for their own interest, rather the interest of the owners. That's a mismatch already. Because since it is the agent who manages now the business, who has a say over the business, therefore it might be that the agent will work more of their personal interest rather than the business interest. And by the time you have an agency problem. So in making a decision, you must take a look into this, whether you will have a problem soon into the agent of a particular business or not. Because what we want is to maximize the shareholders' wealth. What we want is to maximize the shareholders' wealth rather than the interest of the agent. Okay? So agency problem, another axiom of finance. Next axiom of finance, cost bias business decisions. So a while back, we said cash is king. We look into cash flow. And also a while back, if ever, uh, we look also into the incremental cash flows as another action of finance. And another action, tax bias business decision. So aside from looking into incremental cash flows, you look into also the after-tax cash flow. So for example, you are investing into one business which is subject to a 30% tax rate and another business which is only subject to 8% preferential tax rate. So let's say your cash flows are the same, 10 million, 10 million on each. And here, they are both to be collected within 3 years. Now, what is the better business decision now? Is it this one or this one? So under action number 8, you also look into the after tax. The tax of business one is 30%. 10 million less 30% will give you only 7 million. But in business two, it gives you 9.2 million. So because of the consideration of the tax, you can now see clearly what is the better decision. And that is your business two with a cash flow or after tax cash flow of 9.2. Axiom number 9, all risk is not equal. So when we say all risk is not equal, you already know that why. In axiom number 1, we said projects or investment decisions differ as to their risk. There can be higher risk or low risk. So it depends on your type of an investor, whether you are aggressive, you're okay with high risk, you are moderate, so you are only okay on average risk, or you are conservative, wherein you are only okay with low risk. So it depends on you as a type of an investor. So whether aggressive, moderate, or conservative. However, what is important as an action is all risk is not equal. Therefore, don't put all your eggs in one basket. Okay? So although that is higher risk, do not put all of your investments on that higher risk. Because if ever the risk happens, since the risk is high and the risk happens now, mazizero ka. So what I want you to do here, in case you are to invest or to make investment decisions, you try to diversify your investments. So when we say diversify, you distribute your investments. Do not place it only on one particular investment. You place it on different investments. So let's say investment number 2, investment number 3, and investment number 4, rather than one investment. so that at least whatever is the results in one investment and the other investments, whether good and bad, they could offset rather than all bad, rather than all bad. And actually, we don't have an investor which is purely high risk. They always mix it with low risk and moderate risk. Okay? Because if it's purely high risk, ay luging-lugi ka. Kung lahat yan high risk, lugi ka talaga. So mas okay nang i-diversify. And the last axiom of financial management, ethical behavior means doing the right thing. So as a financial manager, of course, you must be with a good ethical behavior. Because if ever you are a financial manager with a good behavior, other persons will trust you and will ultimately trust the business. Okay? So it creates a trust. It creates a trust. But if you are unethical, of course, it eliminates trust and it creates a loss of public confidence. So what you want here as a financial manager is to build trust so that eventually you will gain more business opportunities, which could help increase or maximize the shareholders. And that's it for the 10 actions of finance or financial management that could help you in making your financial decisions, not only on personal decisions, but also of managerial decisions.